Since 2023, when BlackRock filed for a regulated ETF product to expose everyday investors to Bitcoin, it changed the structure of this asset. Not forever, but it's definitely changed the structure of this asset for this business cycle, where we have this base, this explosion, this base, this explosion, this Wyckoff base, and then another explosion. It's a more tempered cycle with less volatility. This cycle has been truly calming in comparison to business cycles of the past, which has usually determined Bitcoin's price action. The volatility profile has fundamentally shifted, as this graphic highlights a prolonged period of time in the blue shading segments where there's reduced euphoria and also fear. As a result of the buyers from every cohort trying to build long-term positions, this has led to a sustained base and with short rallies to the next base. The change here comes from the ease at which Financial Accounting Standards Board allows for the most up-to-date value of Bitcoin to be accounted on the balance sheet, leading to a colossal amount of Bitcoin treasury companies. These corporations have been able to use their treasuries in order to protect the value of their share price by adding Bitcoin to the balance sheet. It's allowing them to actually remain relevant and in some cases even lead to extraordinary growth. In this video, I want to go through some of the data points that could signal where Bitcoin's price action could be in the short, medium, and long term. I want to look at the S&P 500 index, and even though that's reached an all-time high and continues to reach new all-time highs, how there's still room for expansion as the earnings estimate has been a massive beat at over 9%, and actually the estimate from the consensus on Wall Street was 2.43%. This shows that as earnings of the big companies are growing, there's a lot more room in the guidance for the S&P 500 to continue to climb, which will pull up all asset classes. Bitcoin is a beta derivative of the S&P 500. So if the S&P 500 goes up, Bitcoin goes up by 1.5x more. And then I want to finish off the video with how could it all be relevant. So if you like anything to do with assets that can protect your purchasing power into the future, like, comment, and subscribe. Let's go. I wanted to start off with this extremely profound summary of the price action of Bitcoin in this particular cycle. What you're seeing isn't a price glitch. It's a suppression algorithm, an invisible war between ETF market makers, custodians, and the Fed shadow layer. This isn't no price action. It's full spectrum liquidity lockdown. The smart money already bought. Now they're engineering apathy, no hype, no breakout, no spark, just deep, quiet absorption. And when the gate opens, Bitcoin will exit gravity because the price was never the signal, the silence was. This is profound in many ways because usually when you reach a top, it's always at euphoric moments. There are so many obvious top signals. There are people who you wouldn't expect to understand inflation and data and financial data. They're on Fox News or CNBC talking very profoundly about these economic concepts. And so at the moment, with the silence as we reach new all-time highs with Bitcoin, there isn't any euphoria. There isn't mass search trends for this asset, and therefore it just shows that there's a slight difference in this cycle compared to the past. Let's look at the S&P 500. It's just reached a new all-time high, but it's broken out of this massive trend. It's had the V-shaped recovery when it reached the top of this range, just over 600. It waterfalled down to the bottom of the range at 479. And at that moment, with high volume, it turned around and it has broken out of that range. It retests the range, and then it continues to expand. The point is that the earnings delivered stronger than expected results, with the S&P 500 on track for 9.07% growth. This is triple the preseason estimates at 2.83%. Even when you take out the Magnificent Seven, which usually contribute to the majority of the gains in the S&P 500, 4.81% growth has still been reached. So far, 82.2% of the companies have topped the EPS estimates, even post-COVID, where it was 78.2%, marking the best beat rate since 2021. Post-COVID was a very stimulative environment, and therefore it was an artificial expansion in the market, where the Federal Reserve and the government were giving out stimulus checks, and those stimulus checks were adding to empty money supply at a very fast rate, and that velocity of money was going into risk. At the moment, we haven't had a rate cut for months, and the rate cutting cycle starts in September, with 3 rate cuts predicted by the end of this year, and then another 3 expected in 2026, which opens up this valve for more liquidity to enter into the economy, which finds its way into risk assets. The main point from this note from Bloomberg is that even though the S&P 500 is at new all-time highs, the multiple is 22x, which is one of the highest multiples in history for the S&P 500. the earnings has 3x the expectations, which means that there's a lot of room for growth, and the actual material growth is happening across the breadth of the companies within the S&P 500, which means that there is room for expansion into the back end of this year with corrections along the way. The point of Bitcoin is to understand the long-term price action, the fact that it's got a compound annual growth rate in the double digits, and that will continue as it trends down to 21% over the next 50 years. So at the moment, it's about 50% compound annual growth rate, and that annualized can lead to extremely exponential growth in your asset value. And it trends down to 33%, 25%, 22%, and then 21%. To have a compound annual growth rate where you're beating debasement, this is 30 years from now, where debasement is about 12% in terms of the amount of currency that's being printed, and then the inflation rate at about 2 to 4%. You need to beat a hurdle rate of 14% in order just to stay where you are. And if this is a compound annual growth rate of 21% in 30 years from now, it shows that this is the only asset to own. This is an asset that you should have some exposure to, depending on your risk tolerance and how much you understand it. But just to have a little bit of this asset will allow you to protect that purchasing power into the future. So that's the longer term view of where I think Bitcoin is going, and why I'll always have some exposure to this asset, no matter what the price action is on the day to day, on the week to week, and on the month to month. Now, focusing on the more short term price action, which I believe is over the next 6 months, we're into seasonality where September is often quite a bad month. October is always a very good month in terms of its Uptober. And then you've got Moonvember in November, and then you've got the Santa rally. So I feel like with rate cuts, the macro environment being perfect, it could set up the Goldilocks zone for after September being a perfect period of time where there's a lot of expansion in Bitcoin, with extreme corrections in 2026 and in between October and December. Currently, max pain for call options and put options is 100,000, which means that the market makers are going to try and pull the price down to that level. However, when you think about this particular exchange, they're very good at being able to understand the future price in the shorter term. And you've got this extremely high volume of call options at 140,000, which means that Bitcoin could trend in the next few weeks to that level and reach 140,000, just based on these extremely large whales placing big bets on this potential price action. The next part I want to look at is this overall heat map. And you can see that when it's yellow across the board, this is extremely high leverage across all of the exchanges. We don't have that at the moment. We have a very neutral funding rate across all exchanges, even though there's a lot of leverage from the long and the short side on the daily. The actual overall funding rates are extremely neutral, which is not an environment where the market tops out. Doesn't mean there can't be corrections, but it means that we're in a very good, healthy period for Bitcoin to continue to expand. And this is a really important chart, which looks at the daily realized profit and loss ratio. And I like the fact that it shows these extremely high spikes where profit taking is at a peak. These purple bubbles show that it's trending down. It shows that as this cycle expands, people are less interested in taking profit. There's less volume in people taking profit, and it's starting to trend down, which shows that this cycle and the change of hands between prior buyers to new buyers, a new investment class that are starting to buy through the vehicles like the ETF products, they're starting to change, and it's starting to change the infrastructure of this asset. It does not mean that there's not going to be a 30% correction, but it means that the nature and the structure and the volatility in terms of the velocity at which people take profit, that profile is changing, it's shifting, it's trending downwards just based on this data. Bitcoin's 200-week moving average is above 50,000, which really sets a floor for this price action. So if it was to correct, it won't go below this 200-week moving average for long. And if it does, that's a generational buying opportunity. Bitcoin follows global money supply. It goes up and it follows it by about 12 weeks. Now, you can see after this Wyckoff period, the markup is starting to happen, and it looks like it could go into the new reaccumulation range, but it could reach a peak of 140,000. So between 125,000 and 140,000 is a good time to start to layer and ladder out of this asset. Holding your long term, but taking out some of those shorter term trades. Anything that you might need in order to cover any liabilities that you have in the near-term future. The Pi cycle indicators have not come close to touching, and usually when these two indicators cross, it usually signals the downturn, and on a macro scale, it usually triggers the downtrend, which can lead to multi-months of Bitcoin price action going to the downside. This long-term trend line shows that Bitcoin's always topped out from 2018 all the way up to this point. It's never managed to breach this resistance line. For the first time, it's broken through this resistance line and also retested the resistance line to show support. This again shows that there's a structural change to the velocity and the volume and the frequency at which money is coming into this asset class like it never has before, where retail coming in euphoric moments would lead to these massive price spikes, whereas now we have a sustained buyer in the BlackRock ETF clients, with all of the registered investment advisors really trying to push a 2% allocation to this asset class. So it really does start to support that structural change to this asset class. This is from Plan B, and it shows the Bitcoin moving average. And what I like about this chart is you can see the black line, the 200-week arithmetic mean, and the 200-week in gray geometric mean. And when these start to compress, they then separate and expand. And it's at that point when that black 200-week arithmetic mean starts to expand, you start to see the real spike in Bitcoin's price. And then another graphic from Plan B is this extremely important RSI. And for this asset, this RSI can go into the red above 80. It hasn't yet gone into that area, and that's when it really starts to heat up. And that's probably going to happen when Bitcoin price action goes into the 125 to 140,000 range. And that's where I believe that you'll start to see those red dots in the RSI. However, Bitcoin could go a lot higher than that. Hence why I would never be fully out of this position. I'll always hold some just because I'll never know how to time the top. And I never know whether the data that's showing this structural change to it being more of a sustained, longer-term rally to the upside could be proven over the next few years. So I just want to be really clear about this is an asset that I believe in long-term. I think that it just covers every part of an index. It gives you exposure to a decentralized network, no counterparty risk. It gives you the risk on, it gives you the beta derivative, it gives you the hardest currency, and it gives you access to the S&P 500 as it's a global asset that everyone can invest in. So I would never be fully out of this asset. So how could it all be relevant? I want to just emphasize the Federal Reserve. The Federal Reserve, often called the Fed, was secretly planned in 1910 at Jekyll Island by a group of influential bankers and a Senator, Nelson Aldrich, who wanted to create a central bank to control the nation's money supply and prevent repeats of devastating banking panics like the one in 1907. That caused widespread economic chaos. Congress passed the Federal Reserve Act in 1913 officially to make the financial system safer and more flexible by managing currency elasticity and bank stability. But critics say it truly handed power to private interests to manipulate money for their benefit. By printing more dollars and adjusting interest rates to boost the economy or cover government spending, the Fed often increases the money supply too much, leading to inflation that devalues the dollar and reduces what you're able to buy over time. The Federal Reserve is the biggest Ponzi scheme I've ever been able to study. And understanding that the hardness of money is what makes it worthwhile. The salability, it can survive time, it can survive space, and it can survive scale. And with the Federal Reserve, they've managed to completely undermine the monetary system by taking control and using it to their advantage to be able to control when people panic and when people get greedy. And so I believe that Bitcoin protects you against this corrupt organization. Saifedean Ammous is the writer and author of the Bitcoin Standard, one of the most profound books. And if you really want to understand Bitcoin on a deeper level, so you're able to hold it for the longer term, I'd read that book. But he says after Donald Trump's tweet, it's midnight, billions of dollars in tariffs are now flowing into the United States of America. And his correction, which comes from a very passionate place where he just wants people to be able to protect their purchasing power because he believes that money is what solves a lot of the world problems. And peace comes from having an asset or having a hardness of currency, where it can't be manipulated. He corrects Donald Trump and says, correction, flowing out of Americans' pockets into the coffers of a government that can print them at zero cost. All these billions that are coming in, as good as it is, it's still not going to stop the deficit, and it's still not going to stop the debt, and it can still just be printed by the central bank as they buy back the government bonds. I talk about the Overton window of something being radical and unimaginable, and it starts to move and shift towards being accepted and then desired. And I feel like we're in that Overton window with Bitcoin now as it becomes an adopted treasury reserve asset, a foreign investment vehicle, an opportunity for strategic Bitcoin reserves and sovereign wealth funds as they realize that this could protect their value over time. It brings me to this really powerful meme that I want to finish this video on. The lines of Bitcoin are larger when people criticize the asset or they trade the asset, they gossip about the asset, but the buy and hodl line is a lot smaller and the learning line is even smaller. And I found that when I talk to people about Bitcoin, they understand that it can go up in value. They don't know when or how long for or why, but they understand that it goes up and it's a risk asset that you can buy and you can trade and you can make some extremely short-term profits on. But to understand it and learn about it, it's a process in which you start to change your views of the world from a currency perspective and an energy perspective and what can actually protect my value over time. So I hope this video can help you become someone who's more in the learning line or even just the buy and hold line, because this is an asset that has grown millions of percent since its adoption in 2008. And I believe that it has a lot more growth left. Not millions of percent, but it will be worth so much more. By 2030, it could be around $500 to $1 million per coin. That's not that much further from here. It's a 5x or a 10x on the higher scale, on the higher range. So hope you got some value from this video. If you did, like, comment, subscribe. See you in the next one. Thank you very much.